few days ago, I've taught you guys on how to swing on the classical pairs. So now in this very video, let's bring about the bad boys. So today, we will be learning on how to swing efficiently in the volatile pairs such as gold, US30 and Nasdaq. But for today's example, I'll be using US30 as your baseline to understanding the processing of obtaining the beginning of the movement, the potential ending of the movement, and the potential entry that you must be waiting for before the beginning of the swing. So there's a lot of beginning in this video, so why don't we just begin? So before we venture into anything that we do in our life, we need to always understand the risk to reward. To me, understanding the risk is much more important than the reward, because without the risk management, in the end of the day, you'll get fucked. There is a set of rules that you must abide by if you want to go down the approach of trading a volatile pair. So rule number 1, whenever you are trading this sort of pairs, be very sure to understand that your execution needs to be extremely precise and fast. Do not be the kind of guy that thinks you can put a trade in and allow it to run, because one small error, one small carelessness from you might be floating more than 200 to 300 pips. Secondly, you have to be very disciplined in your potential target profit, because when you start trading volatile pairs, sometimes you do not know when is enough, when will it stop, and this is the bad habit that people tend to get into, is trying to overextend their trades. So make sure as a beginner, have some certain sets of target that you think is hard but realistic. For example, setting your trades to be achieving a 60 to 100 pips is a good start, and then you push it up to 150 pips and maximum 300 pips. Because anything more than that, you need a lot of other factors to move the market, such as strong high impact news, fundamental movements, political factors, economical factors, and these are the things that I'm not good at, and hence I never attempted beyond 300-400 pips. That's the max. Last but not least, trading these pairs, you have to be very attentive to the news that is ongoing in the day, because it tends to be very reactive when it starts to play in the US session at the same time when you are placed upon a high impact rate news. If you do not know where to find this information, you can go to forexfactory.com, and from here you can see the scheduling of the news on your daily basis to wherever you are in this world according to your time zone. A disclaimer, if you think your time zone is not set, there is a settings within that area for you to set it manually, but 90% of the time it should be okay. So now we are going to dive deep into the iPad from the technical perspective on how do we obtain the entry point and the potential exit point using the particular engulfing theory. And this is whereby we are going to be experimenting it on a volatile pair. So when it comes to trading a volatile pair, the framework is a little different, because you are not bounded by the concept of time, because sometimes to get your 100 pips, you just need one good H1 candle and you will get it. So based on my experiences, every day, these volatile pairs such as gold, Nasdaq and US30, it will move at least 100 to 200 pips without fail on the average days. So understanding this fact will then give us some sort of confidence to be looking for bigger pips than the usual. So the approach to this is going to be a little different. When you are trading volatile pairs, you must actually be focusing on the critical key levels that the market respond to. Because most of these volatile pairs, you can treat it as a commodity, such as gold. It is a physical object into this world. It has certain values. And from there, you can technically forecast where will people behave irrationally, because in that irrational period of time is when the big movement will happen. So it's our job to identify it. And as you guys know, I'm the best of the best, baby. So for the past few years, you guys have witnessed insane level of precision. And in this video, I'll be sharing you a glimpse to how to do it well. So the first step is, when we are trying to identify a critical level, we don't set the biasness in our head whether to buy or sell. Our duty as a trader is to just map out the potential zones of the day, and from there, we shall then take the trade accordingly when the price comes into our zone. So the best bet is we don't really have to go to monthly, such as the soft currencies or the classical swing pairs. We just focus on understanding weekly, daily, and H4. Having this four confluency will give us extreme precision when it comes to the reactiveness within that particular price level that we have set out. So, to do that, my favorite strategy is I like to go for the reversal trade most of the time because it is a clean, quick in and exit plan. Because from there, sometimes trying to ride a continuation or swinging in the bigger time frame, meaning I want to try hold a sell for 5 days. It's very hard in volatile pairs because the tendency for it to come back to your entry and hit your break even is very high. So I tend to avoid that approach. Hence, I prefer to go for the reversal trades. And this is where people love me for my lines because my lines will then produce sap sap. And now I'm going to teach you how to do it in a simple processing. So when we talk about reversal, we begin with looking at the market. So for this particular example, we are going to look technically for a buy. Why do I say this? Different days will require different approach. So I'm giving you a reference of this week and this day. How do we do it? So if I were to look for a buy based on the given weekly current structure, what I will do is I'll first isolate the nearest engulfing buy in the weekly structure. So for this guy over here, it is within this price region of 33,442 down until 32,842. We begin with that clarification first. Once we have the weekly zones mapped out, then we dive into the H4. Within the H4, what we are trying to look for is pre-breakout. We don't want to know what is happening during the breakout. We are more interested to identifying where did the breakout happen specifically, because this will then give us a better understanding of how price should respond later when it comes there. So now I'll be focusing on the left-hand side. So from here is where I will start deducing some potential zones. And number one, let's begin. First is something that I cannot take out from my eyes is I see this particular engulfing cell. So I will change this color to purple, and it's a good tip over here. Make sure to have good color coordination in your mapping so that you don't get confused by your own mapping. This is an engulfing cell H4. As a trader, it is best if you can walk through yourself in a storyline format. So we begin with this formation during this engulfing cell was formed. During this engulfing cell was formed, this particular purple zone has indicated a potential strong sellers. But once price broke above the purple box, it showed extreme volatility into the buy side. Once it reached the highest point of the level, it came back down, touching this purple box. And then what it does is, in the future, it broke below. Once it broke below, it will test the maximum lowest point of this particular zone. And then we see the behavior. Once it breaks above, it will then test the highest point of the zone. So there is one element of this purple area is what we call the high volatility area. This is what I usually classify as the prostitute zone. Why do I say that? In this particular zone, you know it is going to be strong, it is going to be good, but it is hard for you to decide whether or not it will go up or down. That's why I call it the prostitute zone. Sometimes when you go maybe to a top-notch prostitute house, you might think this is going to be the best experience you will ever get. But during you entering the experience, you will not be sure of how you will end up after that. Will you be safe or are you going to be infected with STDs? So these are zones that I will personally not take in my trades, but it will give strong reaction. So now, do you see once the price enters this zone, it started to behave a bit more aggressively in terms of deciding. So these zones are usually used to decide whether to go up or down. Hence, avoid taking an entry here simply because it will act as the beginning of the movement that you can't control of. So once we have classified this zone, then I'm going to go into this area to look for a good buy zone and into this area for a good sell zone. Now, in this location, as we can see, there is something about this highest region of this line whereby when the price touches, it starts to drop rapidly. It touches, drops rapidly. It touches, drops rapidly. But we don't want this highest point because that is not where the exact sellers entered. But we knew that would be the sky limit to this bigger time frame zone. For it to maintain in a downtrend, this area cannot break above the yellow line. So from there, we have to filter out where is the best area to look for a potential sell. So I like to use the M15 for this. And what I tend to do is I will look for areas that has proven me to give at least more than 100 to 200 pips worth of drop. For example, this location dropped the market for around 300 pips. Is there a structure here? Yes. Number one, a hidden engulfing sell on the M15. Once price broke above, doing a fake out, and then it rejected below, it rejected and broke out by leaving an engulfing sell. So this has then been one level of confirmation to that this zone having sellers living within here. In the future, when price came back into this zone, look at it, it didn't break the purple box, meaning to say it did not or it was not able to cross above the sellers, and hence the sellers took control of the market again and pushed the price back down. So this area in the future, I can assure you will be very, very strong. So look at the behavior, because this was the beginning of this zone. So it has showed massive respect to this area. So this is where I will mark as my potential entry area in the future, because after the breakout has happened, it has left this location for a year. It has came back down here. And what do you guys see? During the moment it broke out with a clean breakout. So what will happen is, if price retests back in here, this will activate the market and then give you a strong reversal or a strong continuation buy. This is how we identify the beginning points for our entry. Number two is now let's go down into the lower sections. In this area, I like this guy over here without having to say. This is our signature setup. An engulfing sell meets an engulfing buy. It means to say, back in the day, this zone was filled with sellers. Once it broke above, it became a zone of buyers. How do we confirm that? By the behavior of the future prices when it came back to retest. It didn't break the box, hence it showed high strength of power. So in the future, I would then look to be waiting if I were to swing. Hold on. In this area. So this is the area I will not take any trade. This is the area I would stand by for a trade. And this is the area I would stand by for a trade. And these zones, mark it, it's marked now. Watch it for yourself next week. I assure you it will give you at least 100 pips. Cut my throat if I was wrong. But if I was right, do subscribe and share for more. If you guys are lacking in the basic knowledge to understand this video, please go on to my other videos in the channel, because I've equipped you with more information that you need as a beginner. My name is Mr. Cloudt. They call me the God of Gold. It's nice to meet you guys and see you guys again in the next video. Bye bye.